Back on Morning Movers, shares of Apple once again under heavy pressure this morning. Shares now below 200 in the pre-market, trading at levels we haven't seen since June of last year. After the tech giant gained 30% in 2024, the stock has slumped more than 20% so far in 2025. Time now for Options Corner. Joining us to take a deeper look at Apple is Rick Ducat, lead market technician. All right, looks like investors are taking another bite out of Apple today. I had to do it, Rick. Take us through the technicals that you see.
Yeah, it's a difficult morning again here. Apple's down about 5% in the pre-market so far. We can see that this one might hurt because Apple was outperforming. You can see S&P, the tech sector in general was underperforming the S&P on this percentage change chart over the past year. Apple was outperforming both. So this is one that perhaps was holding up a little better than most, but now it seems like, everything's kind of suffering today. But we can see here, looking at our chart, we had our big gap down yesterday. The situation did not improve from the open. We did not recapture our previous lows near about 208.42. Instead, we headed more down toward 196, our green line here that represents this significant low point from August 5th, the key day for so many stocks amid troubles in the Japanese stock market that sent equities tumbling. So now we can see that area roughly lines up with the lower end of our channel. So this could be a supportive area to consider near about 196. RSI could be poised to open up in that oversold area here. So be on the lookout if we were to move below that level and close below that level to finish out the week here. To include a couple other studies, volume profile and standard deviation channel, we can see that our most recent rejection of our rally stopped short at a major resistance confluence. 21-day exponential moving average, volume profile, point of control, -1 standard deviation. It all came together right around 225, 226. That's a key point to try to overcome as well if we do start to rally. For now, though, we have fallen below our -2 standard deviation channel. Look for additional volume here around 190. That could be another foothold. A brief glance at a 5-year chart as well. We can see we are, approaching these old highs right here. This green line, once again, a significant low, around 198, 197 or so.
All right, Rick, thanks a ton. That's the Duke of Data, Rick Ducat, with the levels to pay attention to on Apple. Now to take us through an example trade, we've got Tom White, senior options contributor, co-host of Fast Market. All right, Tom, how would you set up an example trade in the context of all this pressure that we're seeing on Apple?
Yeah, stock's going to open up about 194 here. That's going to be, below that 200 level that we haven't seen since August, lows here. So I think a lot of people are looking at this stock thinking, okay, it's 25% off of those all-time highs that we saw just a couple months ago. How do I get into this stock, basically? Valuation is still relatively elevated compared to historicals, but I think a lot of people are saying, well, when do I get in? Because they don't ring a bell at the bottom when a stock falls the way that it has. So I looked at a strategy that takes advantage of maybe some consolidation, maybe a little bit of a pullback, maybe it goes higher. You just don't want it to dump even more, like 2 standard deviations from these levels. So looked at a back ratio, a 1/2 spread here. I went out to the April 25th weekly cycle. That expires in 21 days. You're going to avoid earnings, which is May 1st. So you don't have that event risk in this position. Where I'm going to buy a one lot of the 190 strike puts, just slightly out of the money to the downside in the April 25th series. And then sell 2 with a 185 strike puts. So you're buying 1, selling 2. So you're going to have a short naked put down there, but you're going to collect a credit on this strategy of about $3, right? So what does that mean? Well, it takes my break even down all the way down to 177. That's about 8% below where the stock's going to open up today, about 194 per share. So you've got that big cushion to the downside, but because I'm doing a 1/2, I've got a lot of risk, about $17,700 if for somehow the stock went to zero. But you get a little bit of a kicker at or near that 185 strike here on this type of strategy, where if the stock stays where it is, goes higher, you just get to keep that $3 credit that you collect. If it goes lower, I got a little bit of kicker near that 185 strike, which is about $7 $8 below where the stock is going to potentially open up here. So 1-by-2 ratio spread. If it does continue to fall below 185, you'd have to buy the shares, but you're buying them at a discount at $177 per share.
All right, that's an example trade for Apple. Right now, shares down 4% in the pre-market. Thanks a ton, Tom.